I'm watching the semiconductor space, and NXPI is one that reports next week. It's had a good year, Frank. It's up 28% year to date, but they're in the sweet spot in terms of their end markets. 70% of their end markets and their sales are in growth markets. What does that mean? 40% is in auto, EV, 14% contactless payments, and then the higher margin pieces of their business, IoT, 5G and industrial automation. And so since they touch so many different end markets, I think we're going to learn a lot in terms about supply constraints and also demand. They're doing a great job on their own, gaining market share, because they are really excellent in terms of execution. But we're going to learn more about the growth and the demand for these various different industries. And I think that'll be important for the entire space.
You know, speaking of growth and demand, we look at the SMH pretty much flat over the last month, up fractionally higher. A really good report and good guidance from NXPI. What would that mean for the chips overall?
Yeah, I mean, I think it's all about guidance. And so in the first quarter, they said the second half of the year, they expect to grow 20% above normalized levels. So want to hear what they have to say about that and giving us an update, because we obviously are in the second half of the year, what kind of market share they're getting, who they're taking market share from, by the way. So I do think this will be positive, especially when you add on very solid report from AMD this week, very solid report from Qualcomm as well. So I think it could reignite the group after kind of being flattish since mid-May.
Interesting. All right, we also talked about a lot of names that are tied to the reopening reporting next week. We're talking about Marriott. We're talking about Expedia, Bookings Holdings. What's more important for these companies? Is it their earnings or is it their guidance and their commentary?
Yeah, I do think it is their guidance, their commentary, the visibility, anything, with regards to COVID, Delta variant, anything like that. But I do think that we are seeing travel recover. It is recovering. Maybe it pauses a little bit because of Delta, but on the big picture, I think travel is on the rise. And what I look for in terms of the companies that I want to own, it's not only this theme, right? Because all the names you mentioned will benefit from travel and the reopen, but I also want to have internal companies, things are going on that the companies are doing. So Expedia, for one, I own. It's up 23% year to date, so it's had a nice run. But I think there's more to go because they do have a cost-cutting program that should help margins. Margins can go from the upper teens to 24 to 26%. That's going to create operating leverage. When you have higher margins and lower costs, you get free cash flow. And so they could actually generate something like $2.5 to $3 billion in free cash flow. And then, oh, by the way, they might even increase the dividend. They might even increase a buyback. So I'm really excited to hear what they have to say, both macro and micro.
Shepard Smith here. Thanks for watching CNBC on YouTube.